The truth about DSCR loans, that's what we're going to get into right now in this video. Lately, I've been able to help a lot of investors with DSCR loans. The thing that I have found, though, is that there's a lot of questions about it. And I see a lot of videos about DSCR loans. But I think that a lot of people are leaving out really important key points. So I just figured I would record a video to hopefully help you answer some of your questions if you're interested in it. So the first thing is debt service coverage ratio loan. What is it? It's basically a way to purchase a turnkey rental property without using your income per se. You're using the rental income. So the appraisal on the property is going to need a rent schedule. So the appraiser is going to go out there and they're going to give their opinion of what that particular property can bring in for rent. So we're going to get into a couple things, but the main reason why I wanted to record this video for you was to really dispel a couple myths, because the first thing to understand, it's a great program. Don't get me wrong. I help a lot of people with it. A lot of investors are taking advantage of this program, but the thing that you have to understand is that you do need a couple things. The first thing you're going to need is a decent credit score. This is not an FHA loan where you can get into it with a sub 600 credit score. It's not one of those types of loans. The other thing that you have to understand is that you're going to need a down payment. This is not for primary residence financing where you can get into a property with 3.5% down. Typically, you're going to need 20 to 25% down. Now, there are some investors that are now starting to get data on the first bunch of DSCR loans, and now they're starting to lend with only 15% down. But you're still going to need a very good credit score in order to do that. That doesn't mean you shouldn't do it. I'm just trying to share what, the actual truth behind it. Because a lot of times people, they might just watch a video or whatever and be like, that's great, but the person that's recording the video isn't really telling them the ins and outs of it. So anyway, you have to have a decent credit score and you have to have money to put down. Now, the great thing is that you do not need any income verification whatsoever. And some of you might be thinking, oh, great, here we go again. The whole subprime issue from 2008, 2009. The thing is that you're putting a substantial amount of money down. You're putting some skin in the game here. It's not like where 08 and 09, you're getting into properties with absolutely no money. You don't have any money into it. So if the market were to correct, you're really putting money down in order to offset that. I'm not saying that there aren't any risks involved, because of course there is. But the thing is that that's what you want to look into it. So it's going to take a look at what the rents are going for in the area. The other thing you have to understand about the DSCR loan is, yes, you can use short-term rental income to help you qualify as long as the appraiser uses short-term rental income. So for example, there might be a property that on a monthly lease might only bring in $2,000 a month, but on a short-term rental income, maybe it's in a resort town, it's going to bring in a lot more than that. So you have to make sure that the appraiser is aware of how they're supposed to appraise it with the rent schedule. So I hope that makes sense. So I just helped another investor where I'm located here in Maryland. She bought a property in Baltimore. She was not looking for it for a short-term rental. So basically, the other real key to this is that when you're working with, or if you're looking into doing this, or you're working with an agent, even if you're not working with an agent, that's fine. But the most important thing is not necessarily how much the house costs, but what are the rents going for? Because in that way, your lender can say, okay, well, the monthly payment on a DSCR loan is this, and this is the rent payment. It has to be equal, because if not, it won't matter. Or slightly, if your payment, obviously the idea is for it to be lower than what you can get in rent. Okay, so I hope that makes sense. But it's a great program. It's a phenomenal program. You can buy a lot of turnkey rental properties. A couple things I want to get into. So you do not have to own a primary residence. That used to be the case. I actually recorded a video a while back that said that you needed a primary residence, but you don't. What you do need is, if you do not own a property right now and you want to buy a rental property using a DSCR loan, you do have to show a 12-month rental history. Very, very important. The other thing is, yes, you can buy with an LLC. That's the other question I get all the time. And here's another really cool thing that we do with the investors that we work with is, let's say, for example, you want to buy a rental property with someone else. we will go off of the higher of the credit score of the two of you, the higher of the two. It's really, really great because if one of you has great credit and the other one doesn't, but you're both on the LLC and you both want to be on the title, well, that's a great way to do it. The other thing to keep in mind is that there's fixed interest rate, interest only, and adjustable rates. Now I know before you say, no to an adjustable rate, that's fine. But just keep in mind that if you have an exit strategy or a refinance strategy, you may not need a 30-year fixed, or you might want to go the interest only route. This is not for your primary residence, so you might be able to look at it a little differently, where if you do own a primary residence and that's secured, should that be a fixed interest rate? Yes, well, depending on your time frame and everything like that. But again, just to recap, the truth about the DSCR loans, great loans, you do need a decent credit score. You do need to have some money to put down. In most cases, it's going to be 20 to 25%. Yes, there are some investors that we work with where we can get you in with only 15%, but you are going to have a decent credit score in order to do that. We do not care about any income verification at all. We do not look at tax returns, pay stubs, or anything like that. The other thing, though, that a lot of people miss when they're talking about DSCR loans is you're going to need reserves. So let's say you have money that you can put down on the house, but you're using all of your money to get into the house and you don't have any reserves, it's not gonna work. Typically, depending on how many properties you own, they're gonna wanna see that you have 3 to 6 months per property in reserves. So keep that in mind, very, very important. Now, there are some really nice things that you can do, meaning that like you can get the money for the down payment on a DSCR loan as a gift, So there are some really cool creative ways to help you get into it. But anyway, I hope that this helps. I didn't want the video to be too long, but if you're an investor, or even if you want to be an investor, you want to buy a turnkey rental property, but you don't have the income, but you have credit and you have money down, and you want to get a DSCR loan that's cash, and buy a property that's cash flowing, that's the whole, that's the name of the game. Reach out to me and I'll be happy to help you. I'll put the link in my description. You can schedule a call with me. If you have any questions, you can put them in the comments and I'm happy to help you any way that I can. If you found value in this video, please consider subscribing, liking, and sharing. It really helps the YouTube algorithm so more people see it. I hope that you found value from it. Be well, and I'll talk to you soon. See ya.